Be going through with you Credit Suisse Group AG stock, and just type it in Google and you can see the full name. That's the name, and the symbol is CS is in Nasdaq. And if I want to buy right now, it's 11.58 US dollars per one stock. It's a billion size firm, it's a big size firm, and it's paying a dividend. I just want to point out that any company that is paying dividend, that's a positive news, because that means that after paying their loans, liabilities, creditors, they still have extra money. That extra money it pays to shareholders as dividends. So if a company is paying a dividend that is even less than 1%, don't worry, because that means they're financially very strong. That's extra money of the firm. And let's go and look at when was this founded, 1856. You can also check it in Wikipedia and look when was this founded. And I want to see, I'll just copy this exactly from Google, type Indeed reviews. Let's see what the employees have to say about this firm. I can see we have 1400 reviews and it's 3.9 star. And read through the pros and cons yourself. Check out the photos, jobs listed, the questions asked, and I want to see what people have to say in Glassdoor as well. That's very important to me as well. And so what I'll do is that I can see 4,800 reviews and it's 3.6 star. You check out the jobs listed, the salaries they're paying to their employees, interview questions, the benefits they're giving, and the photos of the firm. Read through the pros and cons yourself. And let's see in Justia Patents what patents it has. I can just type it here exactly from Google, click enter, and nothing appears. So let's try again without this. I'll just move this part and click enter. Yes, no, nothing appears as such, but what I'll do is I'll click this one. I will remove that part, click enter, and let's have a look. So I just want to point out that we are looking at this. We are searching this one, Credit Suisse, right? And just want to point out that please look at assignee or applicant, because these are people who have full rights of the patent, and this is applicant. So I just want to point out one more thing, that this is a bit different name to what we are searching, right? So what I'll do is I'll just copy this exactly, paste it in Google, and see what appears when I type this. So I can see that it's a different firm, I guess, than Credit Suisse. I'll just see that let me see if it's the same thing or what. Sorry. And I'll just copy that. I'll just see this thing as well. And so I think it's the same firm, I guess. And so it has patents in 2004, it has patents in 2006, and check out the recent patents in 2015, 16, 17, because that means they're still innovating. The more patents a firm has, the more stronger it is, because it's innovating and it's difficult to beat that firm. That's exactly the one we are searching, Credit Suisse AG. That's the one we're searching in 2012. They have a patent. And I think these are the branches in USA or something. It's the same firm, but it has branch. I think so. And so that's, just go through it yourself. And okay, that's brilliant. Now let's go to Yahoo Finance and see that what they have in Yahoo Finance. um, I'll just copy that exactly from here. I'll just paste it in Yahoo Finance, and we are going to click CS because that's the symbol. I'll just check in Nasdaq. So yes, yes, so that's the symbol in Nasdaq, CS. So I have clicked CS, right? Go to profile, and I can see the sector, industry, employees. And what is interesting is that they have 5 key executives, and none of their salaries have been shown. It says not applicable. That's something to think about, because we need to search on that, why it's not applicable. Because we need to know the salaries of the key executives for it to be more transparent and for us to be able to build trust. That's very important part. So you need to search why it's not shown as well. So let's go to macro trend and see how it performs in ratios. Let's click price ratio, price book ratio, type in the symbol, um, and that's the one we're looking at. And if the price book ratio is less than 1, that means stock is cheap, it's undervalued, and it's a discount. And if it's more than 1, that means stock is expensive. The higher the number goes, the more expensive it will get. So it will take some time to load because it has a lot of data, so don't worry. And please let me know if you have any questions for me, or if you would like to request a particular stock that you're researching on, you would like me to research on it, I'll do that for you. That's brilliant. So right now I can see that it's discount. It's like nearly, I would say, 44% discount. It's 0.66 times the price, so it's 40, nearly 44% discount. The stock is right now. If I just see in 2019 June, somebody who bought that time, they got 42% discount, because if you just see vertically up, they paid $11 to buy something that was $17 worth. So it's nearly 42% discount. Right now it's 44% discount. But I can see in 2017 December it's 1.05 times expensive. So people who bought that time, they paid $17 to buy something that was $16 worth. Let's go to other ratios and check out current ratio. In this one, I want to point out, if it's less than 1, that means stock is risky, and because liabilities are more than assets. If it's more than 1.5, if it's 1.5 or more than that, that means stock is safe. It has a good margin of safety. We are looking for 1.5 or more than that for it to be very safe. Let's have a look. Okay, so I'm looking for 1.5 more than that. Right now it's less than 1.5. So it's a little bit less than 1.5, but still it's a bit risky. So let's look at the previous trend. Has it ever been above 1.5? Yes, there are fluctuations. So it has been above 1.5 in 2016, but then for a little while and then less than 1.5. So I would say that there are fluctuations. It's like since 2005 up to now, there's no consistency. So I would say it's a risky stock because it has always been below 1.5. Let's go to debt equity ratio. I'm looking for zero point 0.5 or less than that for it to be brilliant. This ratio will tell me if the stock is mainly operating on debt or equity. That's very important for me to know. And so zero point 0.5 or less than that is brilliant. Right now, I'm looking for right now I'm looking for zero point 0.5 or less than that for it to be safe. It's a lot more than zero point 0.5, and if you notice that if you go up and you see that debt is 3.6 times more than equity, it's very dangerous right now. So it's mainly operating on long-term debt, which is very dangerous stock. Let's look at the previous trend. Has it ever been below zero point 0.5? um, I can't see it below zero point 0.5. So I would say since 2005 up till now, since recent 14 years, it's a very dangerous stock because it's a risky stock because it is operating a lot on debt. So there is no there's no a year that it has been below zero point 0.5. So it's a very risky stock, and I can see that it's operating a lot on that. So it's not a little bit on that, it's a lot on that, and compared to equity, so it's a very risky stock in terms of that. Let's go to return on equity. I'm looking for 8% or more than that for it to be brilliant. Let's have a look. Right now, I'm looking at it's a little bit less than 8%. So it's it's not the return I'm looking for. I'm looking for 8% or more than that. So let's look at the previous trend as well. It's a minus return, and which is not brilliant as well. So which is not I'm looking for. So it's there's no consistency of it being 8% or more than that. So that's not what I'm looking for.